Well, hello and welcome to the second trading day in the fourth week of November. We have a packed show for you today, but let's get to the top stories that set to agenda now, starting with what's playing out in the oil market. We see oil prices, they edged up today, extending the previous day's rally. Brent crude futures for January delivery, that rose about 15 cents, about 0.2% to $73.45 a barrel, while the U.S. WTI crude futures for December delivery, that was up about at $69.31 a barrel, up 15 cents, about 0.2%. And the more active WTI January contract, that rose about 13 cents or 0.2% at $69.30. We'll discuss what's driving sentiment later on the show. To the FX market now, NAFEX window was still depreciated against the dollar. That's the Naira, about 10 Naira 32 kobo to fix at 1,676 Naira to the dollar. Opening the week, there was some significant demand of the greenback and NAFEM, causing the Naira to depreciate by 38 Naira 12 kobo to close at 1,690 Naira to the dollar. But analysts are expecting rates to trade at these levels for the rest of the week, barring any significant market activity. I would say the Central Bank of Nigeria has warned the public about fraudsters claiming to have contracts or funding awards linked to the bank. According to the CBN, these claims are false and aimed at defrauding unsuspecting Nigerians. The Apex Bank clarifies that it no longer funds development interventions or special projects and has not authorized any public notices about such programs. The bank is urging Nigerians to stay vigilant and report suspicious activities to law enforcement as it remains focused on ensuring monetary stability and a sound financial system. And some company news now. Coscharis Motors is now the official retail partner of Geely Auto International in Nigeria. The new partnership will see Coscharis Motors exclusively assembling and distributing the all-new Geely GX Pro and the new Coolray vehicles throughout the country. The announcement of the relaunch of Geely vehicles was made by the Group Managing Director of Coscharis Group, Mr. Josiah Samuel, during a visit of members of the House of Representatives Committee on Industry and National Automotive Design and Development Council to the Coscharis Assembly Plant in Lagos. Take a listen.
Coscharis Motors Assembly Plant in the Awuyaya Lekki area of Lagos State. On this day, it's playing host to members of the House of Representatives Committee on Industry and the team from the National Automotive Design and Development Council, who are on oversight duties.
This factory,
the Group Managing Director of Coscharis Group, Mr. Josiah Samuel, conducts the guests round the state-of-the-art assembly plant, where globally respected automobile brands have been produced by Coscharis Motors, and now on the line being assembled is the Geely brand added to the company's portfolio. While the management of Coscharis Motors believes that a lot more needs to be done in terms of implementation of laws to protect indigenous organizations like Coscharis Motors, the chairman of the House Committee on Industry says all hands must be on deck to promote the Nigerian automotive industry.
With a production line of different types of vehicles, definitely they are not Santa Claus, they have to sell. They can't rely on government alone purchasing. That's not their market. Their market is 200 million Nigerians. But because the consumer prefers right now to go and buy a Tokumbo car, we must convince the consumer that the Tokumbo car is more expensive at the end of the day. That the Tokumbo car is more expensive than a brand new car.
We've had the opportunity to interface on issues around local assembly, local manufacturing of automobile, and I think it's been quite a very productive outing.
With a tour of the Coscharis assembly plant over, it's time for some of the guests to test drive the new Geely vehicles, which Coscharis describes as capable, refined, and reliable vehicle options that bridge the gap between luxury and budget.
The Geely is a great brand. Design, it's quite sporty. You're looking for an exciting adventure, you will want to test drive the Geely. You can find Geely to buy in all our showrooms today, whether in Lagos, Abuja, whether it's in Kano, Port Harcourt. The other very exciting thing about the Geely brand is that every Geely model comes with a 6-year warranty program.
Coscharis Motors reiterates that the new Geely Cool Ray and GX3 Pro, in addition to other new models, have what it takes to meet customers' expectations, as the company looks forward to welcoming both existing and new customers. Yomi Otaibu, Channels Television News.
All right, now to our first conversation. We see experts say Nigeria is poised to play a significant role in the global transition to a low-carbon economy. The country's clean tech sector, although still in its infancy, holds a tremendous potential for driving sustainable development, mitigating climate change, and creating economic opportunities. But let's explore the current state of clean tech in Nigeria and the challenges, opportunities facing the sector, and innovations and solutions that can help unlock its full potential. Joining us for this conversation, we have Mr. James Fabola Jr., the Chief Financial Officer at Energy. Join me right here in the studio. It's great to have you.
Same here. I guess a good place to start is Happy International Men's Day.
Happy International Men's Day. Wow, what a time to be a man.
Absolutely.
With a cost of living crisis, I guess this is where you show that man in you and that doggedness at this time. But I celebrate you for coming on the show today. But, you know, definitely looking at your sector, I remember a time when, you know, everyone could somehow, you could afford fuel. You know, it was about 100 and something Naira per liter. And those times you'd hear, you know, people could run generators all night. Mm-hmm. And that has changed. Now, looking at the price of fuel, people are not really running generators overnight like before. There's more quiet. You know, some say it could be a blessing in disguise, you know, according to an article on Business Day. But has that created more demand for cleaner energy? You know, because I've seen the prices of installation, you know, for solar panels. For maybe a 2-bedroom, I've seen that range from maybe 2 to 3 million Naira to install. That's if you're using everything when it comes to heating, you know, and cooling. Some would say that's really expensive. So talk to me about demand so far for clean energy.
No, absolutely. For us, we saw the landscape change fundamentally over the last 18 months, right? With the removal of fuel subsidy, increase in Band A tariffs, and then diesel prices, which have been at sustained high levels, right? All of that strengthened the value proposition for solar. And for us now, we're at the point now where we can say for a fact that solar is cheaper than all these other traditional energy sources. But the big challenge, which has been one of the inhibitors to solar adoption, has been the upfront cost. So when you say solar is expensive, what you're saying is the entry point is still relatively high. Because over an extended period, say 5 to 10 years, the data shows that solar is cheaper. So at Energy Solar, what we're doing is targeted at reducing that upfront cost, which we're looking at incentives. We're partnering with our stakeholders. We're allowing people install solar in their houses and look at getting cost savings from day one. Without that, it will just continue to be a myth, and then solar will continue to be that concept that is not tangible to the common Nigerian.
Because it's quite interesting. I remember a time when I think I was pitched at some time, you know, when the Naira was still quite valuable, you know, depending on where you're looking at it from. It was about 400,000 Naira, you know, to get a full installation, you know, solar. But
and you said no at the time?
Yes, sadly, I didn't take that. But looking at the prices now, it seems currency devaluation, that's weighing on that market for sure.
Yeah, it is. But the caveat is, globally, we're seeing the prices of components fall. So, for example, over the last 18 months, battery prices have halved. Prices of solar panels have even become significantly cheaper, also inverters. Unfortunately, the Naira is depreciating faster than the trend at which these prices are falling, right? But that being said, the net effect is still solar is cheaper, because if you remember, given the removal of fuel subsidy, petrol prices are now supposed to dance alongside the exchange rate, which is we're supposed to be taking on the full effect. Diesel prices continue to be what they are, and even the Band A tariffs, which are MITO, are supposed to be pegged to the FX. So solar is still the sector where obviously most of the components are imported, but the net effect is we're not passing on the full effect to the consumer, because we are leveraging some of the cost savings we're seeing globally, but also businesses like Energy are being a lot more innovative in their execution, ensuring that we're able to finance these solar solutions so the common man can have access to solar and enjoy the benefits of that from day one.
But looking at the clean tech space, at this time, how would you describe investment, in the space? And how is a Trump presidency, shaping the whole clean energy narrative?
It's interesting you start with Trump, right? Because on one hand, you have one of the big proponents of his candidature as president being Elon Musk, being a big proponent of the EE vehicles like Tesla. So I think time will tell how that shapes out. When you bring it home to Nigeria, ultimately what I tell people is investments would follow where potential returns are. Up until recently, the commercial case for clean tech wasn't as strong. But given what has changed over the last 18 months, you will see a lot of money come into funding clean tech opportunities in Nigeria. And we're already seeing a lot of that. Recently, a company called Beacon Power Services closed their Series A round. And you see a lot more of that happen, right? We are currently in a fundraising. I cannot divulge the details, but before end of year, knock on wood, we'll be looking to announce our raise as well. What that means is we're signaling to the market and our stakeholders that we are funded, because one of the challenges with the space hitherto has been there's a low trust factor, but people are also not sure if operators can meet customers at the point of their need and provide quality solutions that would last over an extended period of time. Businesses like Energy, being backed by some of our stakeholders, like Bill Gates is an investor, the Norwegian government, Shell seeding Allon, which is an investor, and then with partners like the Bank of Industry, we're positioned to drive the solar adoption and ensure that over the next 12 to 24 months, we will see a lot more dent in the market and we'll be driving solar penetration. Right,
and just recently we had the proposal for the 2025 budget, and it's a whopping 47 trillion Naira that we're looking at for spending, in 2025. What kind of conversations are being had, in your industry to see if you get a share of that budgeting that's for clean tech?
So speaking for Energy and for some of the stakeholders I've engaged, we don't see it as trying to get a share. We think we underpin everything that is going to happen from an economic developmental standpoint, right? So we take it, there are a lot of businesses today which unfortunately may not survive given their current energy costs. So if the energy transition doesn't happen, we'll see a lot more businesses die. So if you're a government today, and we must give credit to the current dispensation, they've been clear about their direction on renewable energy, clean energy with the Electricity Act and some of the other policies. But the reality is it's not out of the goodness of their hearts. They know it's imperative, right? If businesses will thrive, if jobs will be preserved, then businesses must make that transition because they have to be powered by the cheapest energy source, which is solar. So what the government can do is they've already started, which is the right policies in place, but they also have to put their money where their mouths are. So the incentives, the initiatives to engender a sector that would raise capital and draw in the right type of operators, that needs to happen. And then we become the bedrock upon which all the building blocks which they're talking about, whether it's healthcare, education, hospitality, consumer businesses, all of these need to be powered. And today, at the risk of sounding selfish, solar is the only way to sustainable pathway for some of these businesses. Right,
and talking about cheap, I know most consumers now, I'm sure they would be longing for that word, cheap, because everything is expensive right now. So, looking into, 2025 and beyond, what would you say could be that tailwind to keep renewable energy cheap for a country like Nigeria?
The word cheap can be a two-edged sword. We like to say value for money, right? In terms of what would keep it affordable and ensure customers get value for money is, I think some policies, again, I've given the government credit in terms of policies they've put in place. The risk of sounding like an Oliver Twist, we want more.
Right.
It's still a bit expensive bringing in components. Some of the tariffs, the import duties, those could fall off somewhat, and then the enforcement of that. Financing. Today, commercial banks are lending, no knock on them, at north of 30%, some of it driven by inflation. That won't really crack that solar adoption drive we want to see. So financing has to be affordable. Again, kudos to partners like Bank of Industry doing an amazing job. InfraCredit is also doing a great job in trying to drive cost of finance. We need to see a lot more of that, because ultimately we need to pass that on to the consumer so they can afford to get solar. The other conversations around localizing the supply chain, I think that is still in its infancy. My caveat is always we need to invest in manufacturing that leverages our natural competitive advantage, and not just because it's fancy. So time will tell. There are a few solar manufacturing endeavors locally, a few conversations around battery manufacturing as well, but I think that would come later. But in terms of immediate next steps, policies that support businesses like our energy, reducing the cost of importation, and then financing is a major biggie. That if that falls off, that would be great for everyone.
Right, fantastic. And I'm looking forward to a time where businesses pass on goodies to the consumers and not higher prices all the time. But thank you so much. James Fabula Jr. is the Chief Financial Officer at Energy. It was great having your perspective today.
Thank you very much. Pleasure.
All right, we'll take a break now. When we come back, we're going to check on what's playing out in the commodities markets. That's in a moment. Just stay with us. Welcome back. Now let's check out what's playing out in the commodities market. And join us for this, we have Dumebi Oluwole, a senior economist, joining us right here. Dumebi, it's great to have you.
Thank you so much, Lady. It's great to be here.
Great to have you as usual. And a lot has happened since the last time we spoke.
Yeah.
We have 47 trillion. That's a key word at this point, and that's the proposed budget for 2025. We've had a lot of conversations about the benchmarks.
Yes.
And I'm getting really nervous, when it comes to oil prices.
Yes.
$75, that's the benchmark there for 2025.
Yes.
But I'm seeing weakness in that market.
Yeah.
What are you seeing?
I mean, what I see is volatility.
Right.
And no country can plan with volatility. Right, so whether it's weakness or volatility, there's still a question mark there on how stable, government revenue will be benchmarking oil prices at around where they've benchmarked it at. And right now, there's a lot of uncertainty as to what will drive oil prices in 2025. But what we do know now is that there is some level of escalation with the Russia-Ukraine war. And that might prop up prices, but temporarily, right? Because we've seen that trend over the last couple of years, and we do know that there's a high and then there's a low. Then you also consider the cartel, that's OPEC now, being quite conservative, right, with oil supply, because at the same time they're also trying to keep prices at a particular benchmark as well, so that they're able to break even, and member countries are able to generate some substantial revenue. Regardless of that, then you also consider some level of like the Israel-Hamas war as well. But again, it goes up, it comes down. So market sentiment towards oil prices right now extremely volatile. And the key thing here is that rather than benchmarking Nigeria's government revenue towards, like oil prices being volatile, the conversation should have always been, and right now should even be a lot more around how we can diversify our revenue base, right? So it's a still conversation, but the truth is that we've gotten to the point where we can no longer sideline that conversation. Oil prices, right, the global market, even global growth is projected to still remain tepid, right? So what that means is that in a global environment where demand is pretty slow from China right now, interest rates are still likely to remain high. They're going to fall, but at a very slow pace. But what this means is that the US dollar could likely remain strong, and that affects, exchange currency pressures, not only for Nigeria, but across Africa. So what this means is that commodity dependency, right, has now become, there's a huge question mark there, and countries need to start adding some value and then diversifying their revenue base. And Nigeria right now sits at the core of that conversation.
Right, it's quite interesting you say that, because we're always talking about, oil prices,
Yes.
benchmarking oil prices, and nobody's really talking about diversification. Like, let's
Yes.
look at other resources
Yes.
that we can actually profit from.
Yes.
But, looking at that market now, we have geopolitics, that
Yes.
comes up, supply disruption, it props up the price. They now have China demand realities,
Slowing, yes.
bringing us back down.
Yes.
So is this what's still going to be playing on in 2025?
I mean, from all indications, because as economists, we predict the future based on what is happening now, and from all indications, that's going to be the case, at least up until the first quarter of 2025, or in the first half of 2025. China's economy, there's some level of stimulus going in, but we haven't seen that significantly ramp up, GDP growth. And if demand doesn't significantly bump from China, what that means is that the demand for a lot of global commodities is going to remain slow or remain low. And what that means for prices is that prices are going to be bearish. And if prices are bearish, the exporting countries would not be able to make as much money. And so you find them trying to leverage more on volume than the actual price itself. I remember in the global commodities market, prices are locked in the future. So they trade in forward contracts. And what that means is that if you lock in a price for today that is lower than the price, that maybe in the next few weeks or next few months, you're going to make a lot less money. And what if the prices that you lock in today are also, even if they are higher, the chances are that if prices are going to fall and there's a market expectations that prices are going to fall, what it means that prices are going to fall. So there's that expectation loop as well. So that you find that there's a lot of merry-go-round going on in the global commodities space. I mean, over the last couple of months, I think for the past 2 months, we've seen grain prices increase, still up on the back of, the Russia-Ukraine war. And what that means for a country like Nigeria is that we import a lot of these commodities, right? Like wheat, cereals, sugar. And if the prices are higher, our import, bill on those commodities are increasing. And when you look at it, when you try to net it off with Nigeria's balance of trade, you see that we're not producing enough to sell enough for key commodities like oil, and the prices of that commodity is lower, right? So what it means is we're not generating enough FX. Then you now put it side by side with the commodities that we're importing, and their prices are rising. So what it means is that the FX that we're generating, we're also spending a lot more to bring in more commodities into the country. So when you net it off, you realize that we're spending a lot more than we're bringing in, than we're generating, right? And that raises a huge question on Nigeria's balance of trade, FX stability, FX reserves, and a lot of other questions on the key things that now affect, the domestic commodities market. Because at the end of the day, nobody really cares about what is going on at the helm of affairs until it begins to affect their pockets. And right now, we're beginning to see that sharp transmission effect from what happens on policy scale and even the global scale in terms of what is happening with the people. And key things, food prices and the exchange rates.
Right, and looking at a Trump presidency, Trump is all about drill, baby, drill at this point. So going into 2025, we're seeing expectations of more output.
Yes,
coming out from the US.
Yes.
So I guess it's safe to say the prices will still be pressured.
Yes, I mean you're not wrong there, and. To be very honest, I will say that we most likely might see some level of revisions, right, with Nigeria's budget. They might not change the budget assumptions, but we might see some level of revisions going into 2025. Because the reality on ground is that we do know the kind of presidency that the Trump administration is gonna have, right? We know Trump's stance on crude oil production. We know Trump's stance on geopolitics. And again, it's quite dicey to say this is exactly what is going to happen. But from all inclinations, we do know that oil production is going to increase and that's going to affect price. But at the same time, we do know that OPEC is going to be conservative, right? So what that means is that supply from OPEC might not be as high. So it might somewhat net off. We saw that happen in 2020, right, when we saw an increase in oil production from the US and OPEC was also cutting its supply. So there was some level of, a a matchup basically happening there in terms of supply. Then there's another factor to consider, Chinese demand. We don't expect China's demand to be low all through 2025. So there are expectations that the stimulus packages might begin to, bump up, GDP growth. So maybe at the second half of 2025, we might see China's demand actually begin to pick up, and that might support prices, right? But who knows? If prices are falling again, we might see like a supply cut or something. Then again, I think the important thing here, basically, is also to look at the geopolitical tensions as well. So with the Trump administration, we've seen a lot of analysis coming up to say that the Kremlin and also Ukraine, even Israel and Hamas as well, we might see some level of decline, right, in escalations for the war with a Trump presidency. If that happens, we expect that there'll be some calm in oil prices, right? Primarily, we might not see strong stability, but if that happens, if that is the case, scenario is that oil prices will likely remain around $70, $75 per barrel. And if that is the case, Nigeria, maybe there's some level of safe bet, but better safe than sorry, right? The important thing is that we are realistic with our assumptions, and we do not hedge the entire country's revenue on one commodity. So that takes me back to the conversation I had about diversifying our revenue base. It has become more imperative right now that we do that, not because we cannot enjoy oil or we're not doing enough to produce more oil, because truth be told, the entire conversation around fossil fuels is not going to die anytime soon. We're transitioning to renewable energy, but that transition is going to take some time. Let's be very honest. And Nigeria's revenue is still pretty much hinged on crude oil. So for that conversation, it means that we can still try to make a lot more if we produce a lot more. But again, diversifying our revenue base has to be
very important. I need to see more commodities up there, and maybe one of them, knock off oil. At some point.
I don't know if that's going to happen, but I mean,
at some point in the future. Thank you so much, Dumebi Oluwole. It was great to have your perspective. You're a senior economist joining us right here for the commodities market.
Thank you.
All right, so that's it from me on Business Morning. Markets are open now. We'll give you an update at 1 p.m. on Business Incorporated to see how your money is performing. Thank you for watching. I'm Ladi Williams. I hand things over to the Sunrise Daily team.